All right, good afternoon then, folks, as we are at the beginning of another week of trading on Monday, the 27th of November. We'll have a flick across markets. We'll just have a quick look back to last week as the dollar continued its move lower against the majority of its counterparts. You can see even early on this week, you can see Aussie, Kiwi, and Sterling are all through the highs. Dollar Swiss is through the lows. The dollar index is at the lows from last week. Dollar had a bit of a bounce back this morning, but has taken a slight turn lower since then. A little bit choppily, but dollar yen as well, kind of topping out over the course of the back end of last week. Wednesday, Thursday, Friday, struggling up at these highs, and now is making another attempt lower as well. So the US dollar continues to be put under pressure due to the fact that the market participants are betting on the Fed being done with interest rate hikes and looking towards the next move being a cut potentially as early as March next year. So some market participants think we might see rapid rate cuts from the US next year, but we will have to cross that bridge when it comes to it. We'll have to wait for the economic data to take a slight turn for the worse. It's not exactly been poor economic data, but certainly over the last number of weeks, you've had CPI negative, you've had PPI negative. I say negative, but below consensus. You've other things like durable goods orders last week below consensus. You had NFP, the unemployment rate for October, both missing consensus. So, raft of economic data surprising to the downside in the US, which further reaffirms the stance that no more hikes are needed from the Fed, and that is a reason why the US dollar continues to move lower. So I do think that is the trend, and the trend is set, whether it's technical, fundamental, whichever way you're looking at it. You'd be then looking towards yields. Do yields continue their move lower? They certainly are in today's session so far and are selling off at the moment, certainly across the 2-year yield. And if they continue lower, again, that's a further negative for the US dollar. Where it gets a little bit tricky is stock indexes. I mean, if you have a look at stock indexes last week, they were higher. Not higher by a massive amount, kind of grinded higher. Thursday and Friday were tricky trading days. Markets were short on Thursday and then short early on Friday, so not too much really to see there. But what gets a little bit more tricky is with the stock indexes. I mean, no more interest rate hikes and the next move being a cut is positive for stocks, and stocks do like that. That's had their strongest month since the vaccine-driven headlines of the back end of 2020. Over the course of the month of November, Santa's rally has came somewhat early, but interest rates moving lower are being cut. They do get cut for a reason. That reason is not good for business conditions. So at the end of the day, the US dollar is a slightly easier trade than US dollars lower is a slightly easier trade than stocks higher. These could well continue from levels where they are at, but certainly I'd look at those moves and think that over the month of November it is slightly overcooked. It wouldn't surprise me a bit of a pullback in stocks this week, but that's normally not where the best trading opportunities come on stock indexes, is saying, oh, they must pull back. But at the end of the day, if you're just long stocks every day for the rest of your trading career, you probably won't be too far off being a profitable trader. So but anyways, US dollars lower, I think, is a slightly easier trade going forward. The trend is set, as I said, technical, fundamentally, and then you got to look for reasons to back that up. Come across the economic calendar. GDP figures from the US, the second estimate of the Q3 results. We know Q3 was a decent quarter for the US, as the consensus says, at 5%. But if that was to miss that, again, that reaffirms the stance. Look towards PCE then on Thursday. PCE is obviously the Fed's preferred metric of inflation, right? The fact that it is the Fed's preferred metric of inflation. CPI does give moves, pretty aggressive moves when it does happen, just simply because the reason that comes first, it is obviously an inflation print itself. But PCE is what the Fed look at in terms of monetary policy going forward. So expected to be 0.2% over the month of October. If that was to miss consensus, again, that reaffirms the stance that interest rates do not need to go higher in the US. Personal income, personal spending, you got a manufacturing PMI from the US on Friday, and you'll be looking towards all this economic data from the US to then miss consensus. If it does miss consensus, it's a fresh sell of dollars, and there's another reason to sell dollars, which I think markets need too much impetus to go and sell them at the moment. But you're trying to build confluences, you're trying to build reasons for US dollars to head lower at this moment in time, I think. And US data is obviously a driver of price action in the US dollar. These misconsensus, or some of these misconsensus, it's a pretty good reason to continue to sell. So that's kind of how I'd view this week. It's obviously not a straight line, obviously not that easy to navigate, but these moves lower in the US dollar, certainly you could look at the Aussie, look at your Kiwi, you're getting good dips to buy back into. It's not the same trend as it is in equities, where there's basically no dips to buy back into. US dollar, it's trying to push higher, then gets sold back into, tries to push higher, gets sold back into, and as long as that remains the case, you need to continue to look to sell US dollars. So euro dollar at these highs up here, kind of 109.60, will be interesting this week. Dollar index 103.20, down below the lows of last week. If they are breached, that's pretty clear cut direction to take the US dollar. So yeah, equities wouldn't surprise me if equities had a bit of a pullback, but I think that easily can continue. The trend is still clear on equities at the moment. US dollar higher, especially if these yields continue to move lower and make their way back down towards these lows of 4.4 on the 10-year, maybe back down 3.85 or 4.85, should I say, on the 2-year. So we'll keep an eye on that. We'll keep an eye on yields. We'll keep an eye on the US dollar. Stocks as well, it'd be a little bit trickier, but at the end of the day, the trend is still higher on them too. So we'll update further as we get on through the week. Nothing on the calendar today. The US are still probably recovering from the Thanksgiving antics over the weekend, so we'll let them recover a bit today. Hopefully tomorrow markets can kick back into gear and provide us with some trading opportunities over the course of the rest of the week.